Right, stop scrolling because what I'm about to expose is happening to ordinary British drivers right now without any public announcement, any press release, any warning whatsoever. There are 7 genuinely popular cars on UK roads in 2026, where insurers have collectively decided, through pricing rather than outright refusal, that these specific vehicles simply shouldn't be on the road anymore. Not by banning them, not by any regulation, by quietly pricing premiums so far beyond reasonable that ownership becomes financially impossible for the overwhelming majority of people who already own them. This is happening to mainstream family cars, cars you see everywhere, and owners are discovering it entirely at renewal time, with absolutely no warning beforehand, 240 to 610%, while the wider market moved roughly 12%. These cars have been specifically and deliberately singled out. Subscribe right now. Drop a comment telling me what your last insurance renewal looked like compared to the year before, because the percentage increase you report tells us exactly whether your car is heading toward this exact list. Let's crack on. Car number 7, Vauxhall Corsa-e. Premium increase since 2023, approximately 240%. Primary driver, battery fire claims data combined with repair cost inflation specific to early EV architecture. An insurance underwriter in Bristol who specializes in electric vehicle risk assessment described the specific data driving this repricing. The Corsa-e from this production window sits on shared Stellantis EV architecture, where we've documented a higher than average thermal incident rate compared to later generation electric vehicles. Each individual incident is rare in absolute terms, but the severity when it does occur, complete vehicle loss, sometimes property damage, pushes the claims cost per policy significantly above what conventional petrol equivalents generate. The severity when it occurs pushes claims cost dramatically above conventional equivalents, even though the actual incident rate remains statistically low. A Corsa-e owner in Wolverhampton described receiving his repricing notification. Insurance went from £610 to £2,140 at renewal. I rang to query it specifically. They told me directly it was related to battery fire risk data across this specific production batch of the car. I have a perfect driving record. Nothing about my actual driving had anything to do with this increase. The combined effect of elevated claims severity and the depressed used market values created by this exact insurance crisis means owners are increasingly trapped, unable to afford ongoing premiums, unable to sell for enough to clear remaining finance, watching the car's value erode further specifically because the insurance situation has become widely known. Car number 6, Nissan Qashqai 1.3 DIG-T, premium increase since 2023, approximately 280%. Primary driver, documented engine fire risk data feeding directly into underwriting models. A claims data analyst in Leeds who reviews motor insurance risk models across multiple insurers described exactly how this specific repricing happened. When engine fire risk becomes statistically established in claims data, the underwriting response is genuinely immediate and severe, because the potential claim severity, total vehicle loss, plus potential third-party property damage, plus potential injury claim, sits well above average claim cost across the entire model portfolio. We don't wait for manufacturer fixes to be proven effective over time. We price the documented risk that already exists in the data right now. We price the documented risk that already exists right now, not waiting for proof the fix works. A Qashqai owner in Cardiff described the specific frustration of being repriced for a risk her individual car may not even carry. I've had the recall software update completed. My renewal still came in at almost 3 times what I paid the previous year. When I queried it, the explanation was that the insurer prices the model as a whole based on claims data across the entire population, not based on whether any individual car has had the specific fix applied. I've done everything asked of me and I'm still paying for a population-level risk. A population-level risk she's individually paying for, regardless of her own car's specific status. Car number 5, KIA Sportage. Premium increase since 2023, approximately 310%. Primary driver, bearing-related engine fire claims, combined with theft rate increases compounding the same underwriting model. This is the Stockport driver's car. 31 years of completely clean driving, £420 to £2,910 in one renewal cycle. An underwriting specialist in Bristol, referenced previously regarding this exact bearing failure pattern, explained the compounding factors specifically. The Sportage from this production window carries two completely independent risk factors that are unfortunately compounding within the same underwriting model. The documented bearing material issue creates genuine engine fire risk. Separately, this generation's Sportage has become an increasingly common theft target as criminal networks have shifted toward older keyless entry systems with less robust security. Both factors push premiums upward independently. Together, the effect is genuinely severe. The Stockport driver described her exact experience. 31 years driving, never claimed once, never had a single conviction. My renewal letter arrived showing £420 rising to £2,910. I genuinely thought it was a printing error initially. I rang and they confirmed it was correct, explained it was related to the specific model's claims data, and told me there was very little they could do beyond suggesting I shop around, which I did. And every other quote I received was within a few £100s of that figure. She thought it was a printing error. It wasn't. I'm being asked to pay nearly 7 times what I paid the previous year for a car I bought specifically because it seemed like a sensible, reliable family choice, she said. Nothing about my own driving changed in the slightest. The car itself didn't change. The only thing that changed is what insurers now know about this specific model. Stop. 3 cars already showing increases of 240 to 310%, hitting completely ordinary drivers with completely clean records. The Corsa-e with battery fire severity data despite low absolute incident rates. The Qashqai with population-level repricing applied regardless of individual recall completion. The Sportage, the Stockport case, where a 7-fold premium increase landed on someone with 31 years of perfect driving history. 4 more to go. And these 4 show even more extreme percentage increases than what we've covered so far. Drop a comment right now. Has your insurance ever jumped dramatically at renewal without any change in your own driving record or circumstances? Tell me the percentage and the car. These patterns matter enormously for everyone watching this. Car number 4, Ford Kuga PHEV. Premium increase since 2023, approximately 340%. Primary driver, documented battery thermal incidents combined with extended repair timeframes, inflating courtesy car costs within claims data. A senior claims manager in Leeds, referenced previously regarding this specific PHEV system, described the compounded repricing effect. The Kuga PHEV repricing reflects 2 distinct cost pressures appearing in the same claims file. There's the documented thermal incident history from the recalled production batches, but separately there's the genuinely extended repair timeframe we discussed previously, parts availability issues stretching simple repairs into multi-month processes. Both feed directly into how this specific model gets priced for everyone currently insuring it. A Kuga PHEV owner in Sheffield described his specific renewal shock. Previous premium was £780. Renewal came in at £2,890. I rang for an explanation and was told it reflected updated claims experience across the model, covering both fire risk from the recalled batches and the cost of processing claims generally given how long repairs take and how much courtesy car provision ends up costing the insurer. How long repairs take and how much courtesy car provision ends up costing, folded directly into his personal premium. Car number 3, Land Rover Discovery Sport. Premium increase since 2023, approximately 380%. Primary driver, documented theft rate increases combined with the extensive non-scheduled repair cost data covered extensively in previous coverage of this model. A vehicle crime specialist in Birmingham described how theft data specifically feeds into the Discovery Sport's current pricing. This generation Discovery Sport has become an increasingly prominent target for organised relay theft networks, particularly in urban areas. The theft rate increase, combined with the documented mechanical repair cost data for this specific model that's well established within the industry, creates a compounding effect on premiums that genuinely exceeds what either factor alone would produce. An insurance broker in Manchester who specifically handles premium SUV policies described the practical reality facing current owners. I have multiple Discovery Sport clients who've seen premiums roughly quadruple over the past 2 renewal cycles. The combination of theft risk and known mechanical claim frequency means several mainstream insurers have simply stopped actively quoting for this model in higher risk postcodes, leaving owners with a genuinely shrinking pool of insurers willing to even provide a quote. A shrinking pool of insurers willing to even provide a quote, not declined outright. Just increasingly difficult to find anyone willing to engage at all. Car number 2, BMW 3 Series 320i, premium increase since 2023, approximately 420%. Primary driver, the most extreme documented theft rate increase across any mainstream saloon currently tracked, combined with organized crime targeting specifically established for this exact model. A detective constable in Southampton, referenced previously regarding BMW's organized theft network, described how this theft pattern has continued intensifying specifically into 2026. The 3 Series theft networks we identified previously have become more sophisticated rather than less, as security countermeasures from BMW have been matched and frequently exceeded by the criminal technology used against them. The insurance industry has responded to this escalation by repricing the model significantly faster than they've repriced almost any other mainstream saloon currently on UK roads. An insurance pricing analyst in London described the specific mechanism behind this particular repricing speed. When theft probability within a 12-month policy period reaches a certain threshold in specific postcodes, insurers don't gradually adjust pricing over multiple renewal cycles. They reprice aggressively and immediately because the alternative is accepting losses that genuinely threaten the profitability of that specific model line within their entire book of business. A 3 Series owner in Croydon described his exact experience navigating this repricing. Previous renewal, £940. This renewal, £4,920. I have a completely clean license and 12 years of no claims discount. The broker told me directly that BMW 3 Series theft in my specific postcode has become so prevalent that insurers are essentially treating policies here as near certain claims within the coverage period and pricing accordingly. Near certain claims within the coverage period. That's the specific language being used internally to justify these figures. Car number 1, Range Rover Evoque. Premium increase since 2023, approximately 610%. Primary driver, the most severe combination of theft frequency, repair cost inflation, and insurer withdrawal documented across this entire list. The most extreme repricing event tracked across any mainstream vehicle currently sold in Britain. A high-value vehicle insurance broker in London with over 2 decades in the sector described the Evoque's current position with notable directness. The Evoque represents the single most extreme repricing event I've personally witnessed across my entire career in this industry. We're not talking about a difficult car to insure anymore. In a meaningful number of UK postcodes, we're talking about a car that's functionally uninsurable through conventional channels at any price a normal household could reasonably afford. Functionally uninsurable, through conventional channels, at any affordable price. The theft epidemic driving this has been extensively documented across multiple postcodes, with organized networks specifically targeting Evoques for their combination of relatively accessible keyless entry vulnerabilities and strong export market demand. A vehicle recovery specialist in Manchester described the speed at which stolen Evoques typically disappear from UK jurisdiction entirely. We're seeing recovery windows measured in hours rather than days for this specific model in high-risk areas. By the time most owners have even realized the car is gone and reported it, the vehicle has frequently already left UK roads entirely. An insurer underwriting manager who reviews Evoque applications described the specific internal threshold that's been crossed. In our highest risk postcodes, our claims modelling shows theft probability within a single policy year exceeding 55% for this specific model and production window. At that probability level, offering coverage at any premium that remains commercially viable for the household genuinely isn't possible. We've effectively stopped actively quoting new Evoque business in approximately 30 postcodes nationally. 55% probability of theft within a single year, within those specific postcodes. An Evoque owner in Manchester, the city referenced here for the owner's location rather than introducing a new mechanic source, described her devastating renewal experience. First-year premium was £760. This year's renewal letter, when it finally arrived after a significant delay, showed £5,340 from the only insurer who would quote at all. 4 other insurers I contacted directly declined to quote my postcode for this model entirely. I have 22 years of completely clean driving. None of that mattered whatsoever against what this specific car has become in the eyes of the entire insurance industry. None of that mattered whatsoever against what this specific car has become. The broker's final assessment explains precisely why this entry sits at the absolute top of this list. The Evoque demonstrates everything wrong with the current relationship between popular mainstream vehicles and the insurance market in 2026. A car that sold extremely well, that ordinary families bought in good faith as a sensible, stylish, family-friendly choice, has become, through no fault whatsoever of individual owners, a vehicle that the insurance market has effectively decided shouldn't realistically remain on British roads. 610% average premium increase, insurers withdrawing entirely from dozens of postcodes, owners trapped between finance they can't escape and insurance they genuinely cannot afford. This is the most severe example of this exact phenomenon currently existing anywhere in the UK car market. Right then, 7 popular cars insurers are quietly pricing off the road in 2026. Number 7, Vauxhall Corsa-e, 240% increase, battery fire claim severity outweighing low absolute incident rates. Number 6, Nissan Qashqai, 1.3 DIGT, 280% increase, population level repricing applied regardless of individual recall completion. Number 5, Kia Sportage pre-recall, 310% increase, the Stockport case where 31 years of clean driving meant absolutely nothing against compounded bearing fire and theft risk. Number 4, Ford Kuga PHEV, 340% increase, thermal incidents compounded with extended repair timeframe courtesy car costs. Number 3, Land Rover Discovery Sport, 380% increase, theft rate growth compounded with established high mechanical claim frequency. Number 2, BMW 320i, 420% increase, the most aggressive theft network targeting documented across any mainstream saloon, postcodes treated as near certain claims. Number 1, Range Rover Evoque. 610% increase, 55% theft probability in highest risk postcodes, insurers withdrawing entirely from approximately 30 areas nationally, 22 years of clean driving completely irrelevant to the outcome. The pattern across all 7 is identical and deeply uncomfortable. Individual driving record, no claims history, and personal responsibility have become almost entirely irrelevant to what these specific owners are now being charged. Insurers are pricing the model and the postcode, not the person behind the wheel. And for these 7 cars specifically, that population-level pricing has crossed into territory where ordinary, blameless drivers are losing the ability to legally and affordably keep their own cars on the road. If you're currently driving any of these 7, get your renewal date marked clearly and start shopping competing quotes well in advance. The gap between the cheapest and most expensive quote on these specific models can be genuinely enormous. If you're considering buying one of these 7, get a full insurance quote with the exact registration before you commit to anything, because the purchase price tells you absolutely nothing about what you'll actually be able to afford to keep driving it. Drop a comment. Tell me your renewal story if you own any of these 7, your percentage increase, your postcode, whether you found anyone willing to quote at all. These collective experiences are exactly the evidence that needs wider visibility. Subscribe and hit the notification bell. Right then, that's it from me today. Thanks for watching, and remember, your driving record was never the problem here. The car you happened to choose became one. See you next time. Cheers!